Hi, traders. This is Blake Morrow. You are listening to the Morning Edge webinar, and I want to welcome you all back and happy Monday to you. And so today, like I said, or especially this week, if you're just tuning in, it's going to be a probably relatively slow week, at least the beginning of the week. And there shouldn't be a ton of volatility, especially during the um, uh, North American session, just because there's just not a bunch of there's just not a whole lot of there's not a whole lot of data being released throughout the beginning of the week. Retail sales is really the highlight, and that comes in on Thursday. So this is gonna be the time that you really want to be real selective in your positions. Okay, that means be very selective in where you're entering. Okay, so let's start with the euro dollar. So um, also, if you're coming in a little bit late, basically my view of the dollar this week is going to be this. Let me grab the pen again. Okay, so I'm looking for a move that looks like this. Consolidate. Okay, before um, next week for the June Fed meeting, we're either gonna pop out of this range and rally, or we're gonna pop out of this range and sell off. All right. My assumption is it's gonna be a sell off. We're probably gonna see some dollar strength following the June meeting. Whether the Fed, I doubt they're going to raise rates in June. I still think there's a slight possibility. I think actually there's more of a possibility than most do, but it's still very, very small possibility. But if we get basically the green light that the Fed's going to be raising in September, that might be the catalyst that drives us out of here. But I think we're going to range trade until then. So with that being said, buying it at 110, selling at 113, that makes the most sense to me. Now we are trading basically mid-range right now, following the strong jobs meeting, or a strong jobs report, excuse me. What I'm looking for today is hopefully we can get a short on a rally to 112. So let's hope we can get up there. Now, if we make it to 112 or close to 112, let's see what that looks like. All right. So first of all, you have this. All right. You see that? So if we pop here, it's going to squeeze. See how we could squeeze the market? We'll use that as an opportunity, right? So I think high to low, 38% retracements right there. 50% retracement would take us right to 112.10, 112.13. 618 is 111.92. So of that move. So let's go with this one because it's sooner. Okay. So 111.90. Spike high here. 11.95 might be it. Okay, so 111, let's just call it 111.95 for resistance. And that's going to be key resistance. So like I said, if we get anywhere close to 112, I'm going to be on the short side. I actually might put in an order to short the euro at 111.85 and maybe sell a little bit more at 111.95. But I do believe we are in a range trading environment right now. Although we had, obviously a strong move on Friday, I still think that we're, in a big range. Okay. Now support. So while we're above 111.10, okay, that's support, minor support, 111.10. All right. Matter of fact, while we're here, just to make sure I have a little bit to sell. I'm going to short, I have a limit order to sell some euro dollar at 111.85 if we can get there. I already put an order out, okay? I'll try to sell a little bit more at 111.95 if we can get it. So anyway, so that's what I'm looking to do. Sell some up here, and then, over the next couple of days, cover it down around 110 if I can get it. Let's go to the cable. So the cable is underperforming a little bit this morning. It's been trading a little heavier. We didn't have any data out of the UK to really drive the pound lower. It's just kind of choppy. Let's delete that really quick. And here's a 4-hour chart. So where's resistance today? I mean, I would say it's way up here at 154.50, but that's really too far away for today. So it looks like key resistance for the cable is going to be right here. Actually, let me grab a red line. So you can see the rejection up here at 153. $153 is going to be resistance, and support. Let me stop there for a second. Let's delete this. We go out to a 4-hour chart. You know, that's really key support here at 152. So 152 is really good support, and I do believe we're in a range environment here. So for today, 152 and then 153 is resistance. Okay, let's go to the dollar yen. So the dollar yen, I'm short at 125.47. Actually, it's 148. Really, is my cost average. It's almost 148. Or 125.48. Excuse me. And so I'm up in my short dollar yen trade, and I'm actually net short dollars right now because this is really the only dollar position I have. And I took that position on Friday, and most of you should be aware that I shorted because of the 161% extension. So that means today, 125.85, which was the high on Friday, is key resistance. 125.85 is key resistance. Okay? This is still in a bullish trend. I am trading counter trend. I'm very well aware of that. But my stops are hard stops. Now, what you can see here, though, is support and how important this 125 level is for the dollar yen. So 125 is support, and that's key support. Okay, so we have key resistance and key support, because if we break above 125.85, this thing's probably going to 130 eventually. Okay, if we break through 125, that's probably going to kickstart a move lower, probably back into the 124 area. Hold on one second, please. Okay, sorry guys, I had to blow my nose. Um, okay, let's take a look at the dollar Swiss. So the dollar Swiss. Um, so this downtrend line obviously is very significant. Let's delete this stuff. Um, so the news out of Greece that you know that basically the between Greece being able to put those three payments or push off all the payments till the end of the month, strong jobs report, that all has failed to allow the Swissy to break out. Which what the Swiss franc is telling you right now is that whatever's happening in Greece is still very problematic. And there's a lot of analysis out over the weekend that suggests that there's that the Greek government they just denied having snap elections. You're going to see a lot of because the Greek government had run on the idea that they don't want to make any concessions, that they that 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 they're not going to succumb to the pressures of the trochia, that type of thing. Now that they're trying to negotiate, there's going to be some tensions in the Greek parliament, and this dollar Swiss is, I think, is a great representation of that. Which, as I've stated before, I really want to be on the long side of the dollar Swiss, but with Greece unresolved, I just can't do it. So for right now, as long as we stay below 95, this thing's bearish. You look at I mean, it's bearish as long as we stay below 95. I mean, or whatever the high is here. Yeah, 95. Now support is going to be at 92.80, and if we break through that, that's really going to make it bearish. But for right now, um, that's a 4-hour chart. For right now, so we'll just call it 93.65 and resistance 94.20. I mean, I'd rather just not deal with the dollar Swiss. As you guys, I know I've said that a lot over the last couple of weeks. I have no desire to trade this one, but for those of you that are, I'm going to write down 93.60. So 93.60 is support, minor. Oops. $94.20 is resistance. And we are in a range environment. And like I said, I'm just so not excited about trading the Swissy right now. Okay, let's take a look at the dollar Canadian. So the Canadian, we had this blowout Canadian jobs number on Friday, and the Canadian on general dollar strength rallied, but that the weight of the strong Canadian number eventually broke down the dollar Canadian. Okay, and we basically went into um, the weekend on our lows, and you can see the Canadian, as long as we remain below here, as long as we remain below this yellow trend line, it's bearish. Well, not I can't say it's bearish. I'm just going to say it's going to have a very difficult time rallying while we close below this yellow line. Okay, that comes in right now. 125.25. So 1.2525. Okay. And while we're below that, we remain in the range. If we break above 125.25, or actually 125.50, really is, you have to get a daily close above here, 125.60 or whatever it is. That's when the dollar Canadian actually turns bullish. Okay. It actually will turn bullish above here. But while we're below it, I think the risks are for a downside move. Okay. And support here is at 123.65. And we are range bound currently. All right, let's take a look at the Kiwi. So the Kiwi was just hitting new highs on the day. Brief, but we're hitting new highs. Um, Now, the Kiwi dollar hit really key support, 127% extension on Friday. That's of this low. Uh, Trying to grab the, killing me here. There we go. All right, 174. Trying to get cursor at the right spot. Okay, so you can see here, low to high, 127% extension. Okay, and I drew this out on Friday, so I have this arrow here that needs to be deleted. Okay. Basically, we hit support on Friday. We are bouncing. Now we're going to be facing, well, we are facing resistance right now, actually right now. But it looks like the Kiwi is going to try to break higher. Looks like it. So let's see how high we can go. Because you can see right here, I'm going to grab this red line, do this. So you can see the Kiwi's trying to squeeze right now, which is fine. Let's see how far we can squeeze. I would assume that we're going to struggle as we approach 71. I mean 71 cents or 71.10. So let's write down 71 cents. And I think that's key resistance. For those of you guys that want to short the Kiwi, that's probably going to be a good spot. I might actually think about shorting some up here. Like that. Okay. Key support comes in at 70.20. This is actually an bearish trend. We're just getting a counter trend move right now. So if we can rally, like I said, if we can rally to 71 cents, 71.10, that's going to be probably a pretty good place to be on the short side of the Kiwi. And I personally probably going to try to short it up there too. Okay, if I can get it. Oh, look at look at the euro. The euro's trying to make a push. It's not at the highs of the day yet. If we can hit new highs, I'm going to get short. So 111.85 is where my order's at. Only another 20 pips away. All right, let's go over to the Aussie. Whoops, where am I at? Okay, yeah, the Aussie. Okay, so here's the Aussie dollar. Now, We are creating some pretty major support here. $0.76 is major support. 0.7600. That's major support. Any which way you slice it. Really key support. All right. Let's see. Let me turn down this TV. It's so loud this morning. Why is my TV so loud? Okay. All right. Could you guys hear that? I mean, it's so loud. Um, so let's imagine we squeeze past this resistance, right? Let me see something else. Oh, yeah. Perfect. 76.83. 685. It's resistance. Kind of range bound in the Aussie. So if we can get an Aussie that rallies to 76.85, Kiwi that rallies to 71 cents, and the Euro that rallies to 111.90, might be short in all three of those. Yeah, if we can get this move up to here, because what I'll do is it'll squeeze past this, right? Squeeze past this support. Everybody will start getting squeezed here. Previous support, right? And then I'll just turn around and short it when it gets up there. Hits that downtrend line, 38% retracement. Yes, that's what I'm going to be looking for. Okay, when I come back, I'm going to go get some coffee. When I come back, we're going to look at the dollar index, look at some of these other, we'll look at the peso and some of the Nordic currencies, and we'll get back to it. So I'll be back in just a few minutes. Don't go anywhere. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I'm going to welcome you all back. Happy Monday to you. And as expected, it is a very, very slow Monday. Let's go to the dollar index. We are we got to go to the dollar index because we had already wrapped up with most of the majors. And here's the dollar index. So we got a nice rally on Friday and no follow through today. And the dollar looks like we're approaching probably some pretty key support here, I would suspect. That's all we have to do is extend this out, drop that down a little bit here, and I would imagine that, let's get rid of this one real fast because we don't need to deal with that right now. I would imagine here that this dollar will find support as we get down to 95.75. Let's get rid of this one. Okay, 95.75. So let's just hope the dollar gets down here today. Probably give us a nice rally off of that support level. Looks something like that. Okay, 95.75. The dollar index support 95.75. Okay, that should be pretty key support if we can get down there. So imagine if the euro gets to 112, basically, is the euro is going to be a good short. The dollar is going to be a good long down there. Now resistance. So this is the point where you go, oh crap, it's rallying, and it's rallying without me. That'll probably be right there. Should be about 96 and a quarter. Okay. If we get there. So if we get to 96.25, 96, oops, we're just kind of ranging right now. Okay, so there's the dollar index. Now let's take a look at the, let's go take a look at the peso. This peso is in breakout territory. Okay. Matter of fact, let's go over to the daily chart, and the high 1566, we are at 1568 right now. Okay, we're basically at the breakout point in the dollar Mexican peso. So excuse me, just typing something really quick. So there's the breakout point for the peso, and I would assume that we can come all the way down to whatever the high is here, 1560, 1559. This is all going to be like a, you know, kind of a buy zone for the dollar peso all the way down here. So you know, you might look at the peso as being, it's broken out, but it also may, it could dip a little further, especially if the, you know, especially if the euro, you know, if the euro stages a rally here. Okay, so I'm going to go all the way down to 1560. Then obviously resistance is at 1577. So, and it is bullish, by the way. 1560, 1577. Okay. And that bullish move. All right. Let's go into the Norwegian krona. Okay, so what we thought we had was a inverted head and shoulder, or excuse me, a head and shoulder pattern that did not play out following the jobs report. But what we did do is we made some significant resistance here. And remember, that's also a 618, so this is all really, really important resistance for the Norwegian krona. Now, one of the things that you have to think about with this Norwegian krona, just remember the Norwegian, it was the what was the data? It was the oh wow, the euro's pushing higher. Hold on, the euro's trying to push higher. It was the it wasn't industrial production last week. I'm trying to think what it was. That was so horrible, but it was a horrible piece of data. And even with the dollar pulling back, you can see how the euro's bounced. This Norwegian krona hasn't pulled back much. Okay, that suggests that this 8, it's eventually going to break, but that doesn't mean it's going to break right now. You know, we might get something that looks like this first. Okay, but you might want to keep an eye on this one to the upside. For those of you guys that can trade it, what I would probably be thinking right now is if you get any dip to here, to basically 787. Yeah, that I don't even know if that dip's going to happen. Maybe a 787, probably be a decent place to be on the long side. obviously if it breaks above 8, it is gone. But just remember last week that they had some really, really, really horrible data out of Norway. Okay, let's go over to the Swedish krona. And the Swedish krona looks choppy as all get out. Still does. I don't think it looks in it. I don't think there's anything developing here. Really choppy. I think there's really a whole lot to note here. You know, resistance and support, and we're just kind of mid-range, so I don't think there's a whole lot to do here. All right, so here's your bias chart for right now, and I'm going to take some questions because it is that slow right now. And remember, we're expecting the markets to be pretty slow for the next few days, especially during the North American session. All right, let's go over to first question.